Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of January 7th, 2019. We got our first week behind us here in 2019, and it's been volatile, just like it was at the end of last year. And I'm looking at the pre-market, the overnight markets here, the futures at the open. And right now the S&P 500 is up about 16 points as of now, about 0.64%. And that translates on the Dow to, let's just see here real quick, about 189 points. So, and a similar percentage, about 0.81. So that's where we stand with the pre-market open. Things are up just a little bit. Let's go ahead and look at a daily chart. Here's the S&P 500. Of course, Friday we had a pretty big rally. The day before that we had a pretty big move down. And in the bigger context, starting in October, we've had a really big pull down in the S&P 500. And at the bottom here, we got a little high, higher low, and we got a new high. So, but we still got very significant negative momentum. We're still under all the moving averages, under the Ichimoku cloud. But it looks like we got a little momentum going up, so we could head up farther and find resistance at the 50-day moving average, at the Ichimoku cloud, the 200. I'm not convinced that this overall move down is over, but if the market wants to go up a little bit for a week or two or three, I'll go with it. Here's a pretty good article from Bloomberg. It's dip buyers beware. The S&P 500 bottoming process can take time, and they'd look back at past slumps since 1950, and the average is about 8 months that they've lasted, so we're nowhere near that. Now, I don't trade based on those kind of things, kind of averages of what have happened and things like, buy in May and go away. I don't trade that way. But they're interesting. They're interesting articles, entertaining. And I think I agree, beware. If you're trying to buy the dip and think that's the low, focus on the realities. Focus on the realities of price action. And, this is still pretty significant down move. And in order to prove that it was over, it would have to get above some of the prior highs on the S&P 500, and they're way up here. Nowhere close to that. So sure do have some room to pull up, and if it's going to go up, I'll be going with it. So that's how we're trading according to the realities, and we're actually long a couple positions right now and in pretty nice profit, and we'll stay with them as long as it goes up. There's a lot of news coming this week. There's a lot of things to pay attention to, so let me give a quick run through of what you want to be watching for this week. So I put together a quick list here, what to watch for the week of January 7, 2019. Consumer Electronics Show kicking off Monday, and got big keynote speeches and press releases and stuff coming. Some of the big players there you want to pay attention to: AMD, Intel, Nvidia. Of course, all the big tech companies are there, and they're all going to be trying to impress everybody. But be watching for news coming out of CES. I don't try to guess what's going to happen. We let, if there's news coming out and it moves the stock, we'll let it move, and then we'll see if there's some follow through, and an orderly way to trade that. But should be interesting. Earnings season is gearing up here. We've got Alcoa's considered kind of the official start to earnings season. That's on the 16th. But starting this week, we got a couple big companies, and these are bellwethers in their own sector. So we got Linear in housing, Schnitzer in steel starting on Wednesday. So you definitely want to be watching earnings. We got the FOMC minutes being released on Wednesday the 9th. Jeremy Powell made some positive comments that encouraged the market last week, but the minutes will come out, and you can bet many people will be scouring the minutes word by word, reading tea leaves there, and that could cause a reaction, and particularly if it's counter to the body language that Mr. Powell had last week. So that could cause a reaction. Economic reports coming out that I think matter this week: job openings on the 8th, jobless claims on the 10th, and consumer price index on the 11th, on Friday. So those are big reports coming out this week. And then, of course, any developments with U.S. And China trade talks. We've got some talks planned with senior folks in Beijing Monday, Tuesday. So any breaking news coming out of that. And then, of course, any developments on the government shutdown. Breaking news there could cause motion in the market or reactions and volatility. So lots going on, lots to watch. And we'll be tracking that in the live trading room, and looking for new trades, managing our existing trades, and trading the realities of the market and trying to capitalize on moves. Let's take a look at gold on a daily chart. Gold's had a pretty nice move up and running out of steam for just a moment. But I think, here we had pullback, here we had a pullback. I think this is going to continue. The momentum looks like it's accelerating. So we think there's some more highs to come in gold. And of particular interest is oil. So oil, of course, massive drop over 76 down to about 41. And this looks like a pretty convincing move off the bottom. And it's continuing. And just a retracement to this big move here, about a 50% retracement would take us up into the high 50s, $58, $59 a barrel. Won't go straight, but looks like a high, maybe a little pullback, higher high. So there may be some nice trades coming in oil-related stocks, things like Halliburton, oil equipment suppliers, services providers, all that kind of stuff. And we've got a real handful of those that we're tracking. Well, that's it for this update. Again, lots of things to watch for, lots of potential developments, and the big picture here on the S&P 500. We may continue and drift up for a little bit, but don't think the overall down move is over. We'll go up with it, and then when it turns, we'll take some more shorts and go down with it as well. Just sticking with the realities and a well-defined disciplined trade plan. That's the formula for success. Thanks. Welcome any feedback or comments that you have. Go ahead and post them on the blog page here. I respond to every single one. Take care. Trade safe. Keep your winners big and the losers small. Bye.